People often hear one rule again and again. High volume means a strong trend, but that idea can be misleading, and if you blindly trust it, it can cost you money. Volume only tells you how much trading activity is happening. It does not tell you why that activity is happening. A stock can show very high volume for many reasons, and not all of them support a healthy or sustainable trend. One common situation is news-driven volume. When breaking news, rumors, or social media hype hit the market, traders rush in. Volume explodes. But this activity is often emotional, not logical. Some traders are buying in for fear of missing out, while others are selling to book quick profits. Even though volume is high, the price may move sideways or reverse sharply soon after. That is not a strong trend. It is chaos. Another important point is that volume does not show direction by itself. High volume can happen during heavy buying or heavy selling. If buyers and sellers are equally aggressive, the price can get stuck in a narrow range. You see big volume bars, but no clear progress in price. A strong trend needs commitment in one direction, not just noise. Many times, high volume appears near the end of a trend, not the beginning. This is called climax volume. After a long uptrend, late buyers jump in aggressively, pushing volume to extreme levels. At the same time, smart money starts selling into that demand. Volume looks powerful, but the trend is actually getting exhausted. Soon after, the price stalls or reverses. The same thing happens in downtrends. Panic selling creates huge volume near market bottoms. Everyone wants to exit at the same time. Volume spikes, but selling pressure slowly dries up. That high volume does not mean the downtrend will continue strongly. Often, it means the worst part is already done. Low volume trends can sometimes be stronger than high volume moves. When price moves steadily with moderate or declining volume, it can mean there is little opposition. Sellers are not interested in selling during an uptrend, or buyers are not stepping in during a downtrend. This quiet movement can actually be more stable and sustainable. Volume also depends on the time of day and market conditions. The opening and closing sessions naturally have higher volume. That does not automatically mean a strong trend is forming. It could simply be normal institutional activity, position adjustments, or intraday traders closing trades. Another mistake traders make is comparing volume without context. A volume spike compared to the previous few candles may look big, but compared to the stock's average volume over weeks, it may be insignificant. Without context, volume signals can be misleading. Strong trends are about structure, not just activity. Higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend matter more than volume alone. Volume should support the price structure, not replace it. The real power of volume comes from confirmation, not assumption. When price breaks an important level and volume expands in the direction of the break, that adds confidence. But even then, volume is a supporting actor, not the hero. So remember this clearly. High volume means participation, not strength. It tells you many people are active, but it does not tell you who is winning or how long they will stay. To understand a true trend, you must read price action, market structure, and context first. Volume is just one piece of the puzzle, not the whole picture.